Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 28th, 2016. So I'm recording this on Saturday, and it's Easter weekend. And I hope that you and your family, however you celebrate Easter, you just have a great weekend. And since it is Easter weekend, I found an article that I thought was super appropriate, not only because it's Easter, but because it's describing the current market. So let's take a look at this. It's fun. So here's the article from Barron's, and the headline here is "Enter the Bunny Market." So Easter weekend, that's pretty good. Here's the graphic. They got the bunny here, and the author of the article says, "Hey, we're not in a bull market or in a bear market. We're in a bunny market because that's a market that hops around relentlessly without ever seeming to go anywhere." So that is kind of describing where we're at, and it's funny, and I would say we are temporarily in a bunny market. But let's look at a chart and really see. So here is the S&P daily chart, and if we stick with our bunny theme, you can see that there have been some bounces, kind of like a bunny here, right? Boom, boom, and it really looks like the next bounce is down, has begun, and although it is kind of hopping around and not really going anywhere right now, one thing you can notice is if you draw a trend line, it's going to really be hard with the mouse. It's not going to be a very good line, but here, down through here, down through here, right? This hopping bunny market is definitely on a downtrend. And the technical indicators, the high probability is that this will continue. So we did have a pretty good run up through, late February and March. This leg here, I talked last week how it's almost identical to this leg here, and there is evidence that it's beginning to turn down. And one of the things is the momentum continues to come out of these moves up. This one was higher, if you look at the oscillator here, than this one, just a little bit, just barely. The analysis is unchanged. I still believe we are in a bear market and that we have more lows to come, and this next move down quite likely will take out the lows from January, and we will continue on down to hit the targets that I've been talking about on the weekly chart, and we'll just revisit them real briefly if you're new, maybe hadn't seen those. So let's take a look at the weekly chart on the S&P 500. So here's the S&P 500 weekly chart, and again, a 6-year bull run up, a series of lower lows, lower highs, lower lows, moving up, but full expectation that it would come down now and put in yet another low down here. And this is an old analysis here. Let's get rid of these lines. So the Fibonacci retracement levels that we expect this to get down to eventually as this corrective wave, remember this was an impulsive wave up, this is a corrective wave down, and the high probability area for corrective waves to go is 38.2 to 61.8 Fibonacci retracement, and that's where we expect it to get down to. And on the S&P 500, that's 1644 to 1343. So it won't drop in a straight line. It will continue down in a series of lower lows, lower highs, lower lows, but that's the area we expect it to work its way down to through this year, maybe into next year. So that update on the market is unchanged. Now let's go ahead and take a look at gold and oil as always. So here's gold on the weekly chart, and if you've been following for a while, we had said that it really looked, we had this long impulsive bearish market in gold, roughly inverse to the equities market, the S&P 500, and it put in this bottom, and on the daily charts we saw more clearly a pattern of a new higher high, higher low coming out of this bottom. We said if it went through 1113 that we thought the recovery was on, and that the target zone for gold would be 1347 to 1532. Again, Fibonacci retracement levels. And so it exploded through that level, and now it's pulling back just a little bit, but that's completely normal. Again, price does not move in straight lines. So we got this high, we'll put in a higher low, fully expect new highs to come in and work its way on up to this target zone on gold. So we're already trading that. We're in trades like I'll show you a couple of them here. Here's MUX, McEwen Mining, and it's a gold mining stock. And just about the time gold broke out, we were watching this very closely, and we said, boy, if gold goes above 1113, and this one goes to $1.25, we're going to get in. Low price stock, trades at really high volume. So we got in this at $1.25. We've already sold 2/3 of it, and now we're just letting the final third run. We got in at $1.25. It's up at $1.87. Now those sound like low prices, but we're at like 40% profit on this trade, and there's maybe more to come. So really, really good deal. We got into a handful of gold mining stocks. We got into some other mining stocks as well, and iron's really taken off, and we're into some stuff like that. So it's fun to share some of the trades we're in. So let's look now at oil. So this is the oil futures contract, and it's been an amazing impulsive move down for quite a while. Came down in 2014 from over $140 a barrel to here in January to under $30 a barrel. What a dramatic move. That's all one big impulsive move, and again, a corrective move to that is expected, and it looks like it's underway. I had said if we get through 3709, that would be proof of this bottom being put in, and then a high, a higher low instead of a new low, and take that out. That's the pattern I look for. It's Dow theory. So if we take out 3709, pretty good evidence that the recovery in oil would be starting. If we were skeptical, then 3903 would be a level. It's blown through both of those. And of course it's going to pull back, right? Higher highs, higher lows, higher highs, higher lows. We expect it to hold right now at 3709 and reverse up. That would continue this current pattern. If it doesn't, that just means there's bigger moves, but really good evidence that the recovery, this corrective wave in oil is underway. And we're already seeing prices at the pump. I just saw the article that the national average is now up over $2 a gallon. So kind of a bummer to pay more at the pump, but if you're trading oil, you can more than make that up. You do this right, you can buy a new car. And we're in some great oil trades already, and we got more to come in my stock picking service. And there's another thing I'm looking at, and that is coffee. Coffee seems to be making a comeback. It's been in a bear market for a long, long time, and it, similar to oil here, really looks like it's put in a bottom. So I've got some coffee-related trades coming. If you're interested in checking out the stock pick service, again, we got some more oil trades coming. We're in some good ones right now. There's still entries possible to get into quite a few of our trades, and you can try it. There's a banner coming up on the screen here. You can click to find out more, but you can try it for $7 for a 10-day trial and see these picks and see if the service is for you. So I invite you to give that a try if you're interested. Well, that's it for this week. Have a great Easter, and I'll be providing update next weekend. Take care till then. Thanks.